Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Chicago soybeans. 27 weeks ago here, and at every opportunity since, I have said, and I quote, "The only other thing to bear in mind is not here on this daily chart, but in Chicago soybean meal." And that is the well-highlighted annual key reversal down we saw there for 2023. Not directly related here, but not worth ignoring either. End of quote. Last week I said, and I quote, "I think with us being now in the second month of the new year of 2025, that I should now set aside as the world and my charts have moved on. I should set aside this as the world and my charts have moved on, and there are more recent and more interesting features to discuss." End of quote. Now, while I think this is still true, this thought still also haunts me somewhat. Nevertheless, there are a number of features I brought up 2 weeks ago and do so again this week. The first is a big picture item, and that is the potential we now have for a very large July 24 to date double bottom pattern. Though these past 2 weeks have been, how shall I put it, troublesome to this idea. We are nevertheless on the verge of completing the construction of this pattern, and also on the verge of triggering the outcome. Thus, if prices break higher over, and here is the bit you need to concentrate on, as I'm not exactly sure which one of these I would use, but over the 50% Fibonacci line, the May to August 2024 move at 1098, or the 61.8% absolute Fibonacci line at 1106, then we could have a primary potential up as far as 1195 and a secondary harder to achieve potential up as far as 1235. As I said earlier, these past 2 weeks have been troublesome to this idea, but it has not extinguished it. The second feature was the possible bull channel highlighted in dark blue on my daily chart that looked like being generated since the breakup over the old broken July to September 2024 bearish shift pitchfork in the middle of January. The upper trend line I had and still have high confidence in, as it has multiple points of contact with the top of the market since late December 2024. However, the lower trend line was an issue. As I said 2 weeks ago, and I quote, "Of the lower trend line is only a 2-pointer. We'll see how this develops." End of quote. Last week, prices punched down below this lower trend line, so I'll instead concentrate on what this break lower from this action may bring. Hence, we have a target X below in the 995 area. I am not sure about this target, but is nevertheless there as a target for now. This week, this shortened week in which we are in, well, we have not seen any major move in either direction. Though I'm very mindful of the declining gold long moving average that is piercing the price action as it heads lower. So keep an eye on the supports below at the November 2020 lows at 1045 and 1033, as well as the October 2020 low at 1017 plus the rising short medium moving average, which is currently at 1027. And I suppose the neckline extension, currently 1037 to the small October to November last year head and shoulders top. Meanwhile, topside, well, we have the previously mentioned 50% Fibonacci line at 1098 and the 61.8% absolute Fibonacci line at 1106 to watch out for as well. Chicago soybean meal. The main recent pattern here in this market had been, I suppose still is, the dark blue May to October 2024 bearish shift pitchfork. You can clearly see highlighted in dark blue on my daily chart. The market is in between the dark blue overhead upper time, currently at 314.80, and a dark blue middle time below, currently at 283.20. This pattern had previously been breached on the upside in January, but it had not been broken, and had also been reinforced by a congestion area further overhead between 323.30 and 326.90, as well as the declining gold long moving average, currently at 321.10. Along with, I suppose, the nuisance value of the bright red trendline extension to the July to September 2021 descending wedge pattern, which is currently at 320.30. Now looking further down, we did have support from the mauve medium moving average at 305.60 currently, and to a certain degree the bright red green short medium moving average currently at 304.40. But these are now to be regarded as resistances, as prices dipped below both, though not with much aggression. Neither look that strong right now. We also had, until last week, an interesting mid-December 2024 to date bull channel that might possibly have morphed into a bullish ascending wedge pattern, and that's currently 311.20 to 333.50. This is highlighted in bright green on my daily chart. Well, this pattern had been broken on the downside, and so I feel obliged to lay out some targets below for such a move down, even if I feel they may look a little excessive. Thus, a primary target X is down in the 277.90 zone, with a secondary much harder to reach target X1 in the 265.90 zone. Now, the recent action had also left us with two new patterns, one which I had previously mentioned and one that has revealed itself. The previously mentioned pattern was the weekly key reversal down seen 2 weeks ago, which has seen a pretty good follow-on lower since. The second is a reinterpretation of the December last year to February this year bull channel into a head and shoulders top pattern. The purple neckline for this is very close to the bright green lower bull channel line. But what is interesting here is that the targets for such a pattern are not as ambitious as the bull channel, the broken bull channel. So it is worth noting. Thus, a primary target X2 for the head and shoulders top would be in the 288.80 zone, with a secondary harder to reach target X3 down in the 280.20 zone. Now, this commentary would not be complete without my discussing what I call the elephant in the room, or at least the elephant in the room which has stayed there throughout 2024. And that is the key annual reversal down, seen here at the end of 2023. I said, and I'm afraid I have to repeat something I've highlighted now for 87 weeks, so coming up for nearly 2 years. And I quote, "I now only need to remind you once again of my words of 67 weeks ago," so that's now 87 weeks ago, "and ever since when I pointed out that the Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023, and we have been living in the shadow of this pattern ever since." End of quote. I've also added ever since, and I quote, "There is only one thing you take away from my new musings, let it have been those words." End of quote. Last week, I said, and I quote, and I'm sorry for quoting again, but it's true, "Today, as we fully enter the second month of 2025, perhaps, just perhaps, that shadow is dimming and other features might just start to take precedence." End of quote. Well, last week, and I suppose even this week so far, has shown that the shadow cast by that supremely significant bearish pattern, annual key reversal down, so long ago, still darkens the skyline of this market today. Chicago soybean oil. At the end of last year, I drew what I called, and I quote, "a new prospective dark blue bullish Andrews pitchfork," which I drew 4 weeks ago, so that's now 13 weeks ago, for the mid-August to late November move. End of quote. I've since finessed this into a mid-August to late December 2024 dark blue bullish Andrews pitchfork, with the market in between the overhead middle time, currently at 48.74, and the lower time below, currently at 42.57. The middle time overhead has been tested throughout January on the upside and has held down prices on a closing basis. However, that is not all, and I am somewhat loath to mention this, but that is not the only bullish shift pitchfork for this move, as we also have a bright red, shallower, bullish shift pitchfork operational for the same move. The market is right now between the middle time below, currently at 45.21 for this, and the upper time above, currently at 50.32 for this pattern. In recent times, the middle time has been tested on the downside and has also more or less held. And that is where my small quandary is, because I do not like having, as is the case here, both the bullish Andrews and the bullish shift pitchforks for the same move on the same chart at the same time. One should morph or finesse into the other, usually, but not here, as both are still valid. Nevertheless, that is what we have, and until something else shows up, I will stay with these bullish pitchforks. Now, talking about something else showing up, we have had for a few weeks now an immediate open question here. Is the action since early January to date, is it a double top or a bullish halfway hesitation, or is it something else entirely? That is the most interesting question right now. This week it is increasingly looking like we are not going to have a double top, but the idea of a bullish halfway hesitation, well, the recent action does not seem to have the strength we saw in mid-January to make a strong move higher, such as I'd like to see. If it was a bullish halfway hesitation, what looks likely is that we have the beginnings of a possibly another pattern, bullish pattern. And I have a possible candidate here. Please look at the whole late June 2024 to date action as a possible really big double bottom that is not done yet, but prices rising could trigger such a pattern. However, there is always a however. However, it all depends on what happens at the key 38.2% Fibonacci line of the big March 2020 to April 2022 move at 49 even. This Fibonacci line has been phenomenal. It capped the market in July and November last year, and would look to likely try something like this again. This time, especially when the dark blue middle time moves above it, which should happen early next week. So, watch this level carefully for any consecutive closes above it, and even all the way up to the next interesting lesser Fibonacci line at 61.8% Fibonacci line, the July 23 to August 24 move at 49.92. Added to this is what I said last week, as it is still valid, if perhaps more on the downside now, and I quote, to keep a wary eye on the old congestion seen back in July 2013 between 46.80 to 47.30, as it seemingly is still somewhat influential even now. End of quote.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.